Well, hey everybody, it's Trucker Stock Trader here. You know, the market is a lot like fishing. Throw your line out there, sometimes you catch a big one, sometimes a little, sometimes you get nothing. Well, for me, I don't use chatterbaits or rubber worms. I use the fundamentals, technicals, and the charts. Today, I'm going to go over a stock that's really got my attention, because I like getting into things before it really takes off. That way you get the most profit. We already know, like AI, it's already exploded. Look at Palantir, Nvidia. But the massive AI data centers that needs to be made, this is a whole new opportunity. And that's where the solar comes into play. ARRY Technologies, ticker ARRI. They make solar tracking systems. They're the machines that move the solar panels as they follow the sun throughout the day, squeezing the maximum power out of every single panel. The really big thing here is they're sitting on a massive $2.4 billion order backlog. So that means they've already sold stuff before it's even made. That's something to get your attention. Anyways, the last quarter, they beat their earnings expectation. They reported a $223 million in revenue, and then they raised their full year guidance to between 1.2 and 1.3 billion in revenue. Analysts has already averaged price target of $10 on the stock. Here is where it gets really interesting. AI data centers are already exploding, and if you keep up with the news, Kevin O'Leary's the Stratos project in Utah is over 62 square miles. It needs up to 9 gigawatts of power. That's more electricity than the whole state. And that power has to come from somewhere, and solar is one of the fastest ways to build it. Now here is the key thing. This is not a stock you just buy today, wake up next week, and it explodes. It's not a get rich quick. But if you believe in the AI data centers and this AI that is going to be a full growth, then ARRY is a stock you can buy now, hold for 1 to 2, maybe 3 years as the infrastructure gets constructed. That's where the real money is going to come from, holding stocks like this when you buy dirt cheap, and then when you start seeing the growth and everything going, you can really see that portfolio start growing more than just 30 or 40%. But let's be real, there's always going to be risk no matter what you do. And this is some of the risk for ARRY. The revenue dropped 26% year over year. They posted a GAAP net loss of $13.5 million. They're carrying about $657 million in long-term debt, and the stock is still down over 83% from its all-time high of $51. But you also have to look that they've already have a back order of over 2.4 billion. So yeah, without risk, it's not without risk. But if you're bullish on AI centers and the power build out that's coming, this is one that's really worth watching to get in early. What do you guys think? Would you hold it, ARRY, long term, or are you just going to stay away from it? Drop your thoughts and comments down below. And if you're new here, hit that follow or subscribe button so you don't miss the next one. Anyways, thanks for watching. Trucker Stock Trader, I'll see you on the next one. Peace.
Money, 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 all I see. Money, 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 all on me. Money, 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 stack it tall. Run it up.